Hey, welcome to Financial Cake. Look, we're not here to talk about the possibility of a global recession. No, we're talking about how you can turn it into your single biggest financial opportunity. So forget all that fear-mongering you see everywhere else. This right here, this is your playbook for not just surviving but actually thriving. Let's get you ready to win.
So you might be wondering, why are we even talking about this right now? Well, it's because the experts, they're already sounding the alarm for 2026. We're seeing these little warning signs popping up all over the economic horizon. And that means the absolute best time to start building your financial arc, it's not tomorrow, it's right now, today.
And listen, these aren't just some minor worries. We are literally looking at a potential perfect storm of issues. You've got the AI bubble maybe bursting, inflation coming back because of supply chain problems, oil prices spiking from all the global tension, and oh yeah, governments drowning in debt. Seriously, any one of these things could be the trap.
Okay, so how do we get ready for this? It all starts by building your own personal financial fortress. Think of this as your first line of defense. It's that cash cushion that lets you handle any sudden shocks without even breaking a sweat.
Let's start with a really simple number, $1,000, just $1,000. I want you to imagine a sudden, totally unexpected expense for that amount. You know, the car breaks down, a surprise medical bill, you have to book a last-minute flight. What would you do?
And I want you to be really honest with yourself right now. Could you cover that $1,000 emergency without whipping out a credit card? Without going into debt? Your answer to that question? Man, it's a huge indicator of just how financially resilient you really are.
Now, if you hesitated for even a second, you are definitely not alone. A 2024 survey from Bankrate dropped a pretty shocking statistic on us. 44% of Americans could not cover that $1,000 expense from their savings. Let that sink in. That's nearly half the country, living just one small crisis away from going into debt.
And this is where the mindset shift happens that will change absolutely everything for you. I love this quote from JP Finance. It says, "In a recession, cash isn't just comfort, it is power." And that is so true. It's the power to make smart choices, it's the freedom to walk away from a bad job or a bad situation, and it's the peace of mind to navigate stress with a clear head. So how do we build this cash cushion? It's pretty simple, actually. Here are 5 basic steps. First, get that money out of your everyday checking account. Open a separate one. Second, put it in a high-yield savings account. Let your money make a little money for you. Third, automate it. Even if it's just a tiny amount each week, set it and forget it. Fourth, you gotta be disciplined. This is for real emergencies only. Job loss, medical bills, you get it. And fifth, if you do have to dip into it, your #1 priority is to fill it right back up. All right, so our defenses are getting stronger. Now it's time to go on offense. Let's talk about protecting your single most valuable asset. It's not your house, it's not your car, it's your ability to earn an income.
I like to think of this like a 3-layered shield, okay? Layer 1 is all about becoming layoff resistant at your current job. You want to be the person your company absolutely cannot afford to lose. Layer 2 is building a stack of skills that are recession-proof, skills that are always in demand no matter what the economy's doing. And layer 3, that's about adding a simple side income, even a small one, just to give yourself that extra buffer.
So what are these recession-proof skills, anyway? It's actually really simple. They're skills that do one of 2 things. They either make a company money or they save a company money. That's it. See, during a downturn, companies cut all the fluff, but they double down on anything that drives the bottom line. So we're talking about things like sales, copywriting, data analytics, coding, and especially getting really good with AI and automation tools. Skills like these make you an asset, not an expense.
Okay, now for the really exciting part. This is my favorite part. With our defenses locked in, we can finally start playing some serious offense. Because this, right here, is where fortunes are made. A recession is the single biggest transfer of wealth in history, and you want to be on the winning side of that transfer.
And the entire difference, it all comes down to mindset. See, the average person panics. They look at their portfolio, they see all that red, and they sell everything, locking in their losses. But the prepared investor, they see the exact same red and they think, awesome, everything's on sale. They know this is their chance to scoop up quality assets at a huge discount. So what are these on-sale assets we should be looking for? Well, a key strategy is to focus on what are called defensive stocks. These are basically companies that sell stuff people need, not just stuff they want. I mean, think about it. Even in a recession, people are still going to buy groceries, right? They're still going to need medical care, they're still going to pay their electricity bill, and that's exactly why these companies tend to be so much more resilient.
And here are just a few real-world examples that Zacks investment research pointed out. You've got Turning Point Brands. They sell consumer products that people buy out of habit. You've got Johnson & Johnson, a healthcare giant. I mean, people don't just stop needing medicine. And then there's NextEra Energy, providing electricity, an absolute essential. You can see how these companies have much more predictable income, even when times are tough.
Okay, let's talk about another classic defensive play, an asset that has been a store of value for literally thousands of years. We're talking about gold. When things get uncertain and people start losing faith in currencies or the stock market, they often run to gold as a safe haven.
So the question is, how much gold should you actually consider having? Well, the investment firm Sprott suggests somewhere around a 10 to 15% allocation in a well-diversified portfolio. And that could be a mix, some physical gold for that long-term stability, and maybe some stocks and gold mining companies to get more direct exposure to the price of gold itself.
And this chart, wow, it just brilliantly illustrates why. Just look at this data. During the 7 major crisis periods since 2007, when the S&P 500 on average lost over 7%, gold gained almost 17%. It has historically done its job as a portfolio stabilizer perfectly, right when you need it the most.
Now look, these strategies are a fantastic starting point for anyone. But it is so important to remember that a one-size-fits-all approach just doesn't work in a global recession. The best strategies are always tailored to what's happening in your local economy.
So, for example, for all of our viewers in Nigeria who are dealing with currency volatility, there's a really unique strategy that can be an absolute game changer for protecting your long-term savings.
So check this out. The National Pension Commission now actually allows eligible Nigerians to contribute to their pension in a stable foreign currency, like the US dollar. This is an incredibly powerful way to hedge against those local currency swings. What it means is your retirement savings are protected from the risks of inflation and depreciation, and that preserves their value for the long haul.
All right, I know we've covered a lot of ground, so let's bring it all together right now into your winning playbook, a simple, actionable checklist you can start using today.
Here it is, your 4-point recession-proof plan. Number 1, build that cash fortress. Number 2, fortify your income. Number 3, stay in the market and make sure you're investing defensively. And number 4, this is the most important one, you have to adopt the mindset of an opportunist, not a victim.
So I want to leave you with this one powerful thought. A recession isn't just a downturn. It is the single biggest transfer of wealth in modern history. And that wealth moves from the panicked and unprepared to the calm and prepared. So the only question left is, which side are you going to be on? If you want more explainers just like this one to help you get ready, make sure you subscribe to Financial Cake. Thanks for